Hello Fools, and welcome to another investing video. I'm Andy Paul for the Motley Fool, and I'm joined today by analyst Nate Weishaupt. Now Nate, I've been sort of reading around today and looking at some of the companies that are currently doing share buybacks. So as a Vodafone investor, I know that Vodafone's got one in the pipeline. I also saw that BSkyB have also announced that they are about to engage in one too. So I was wondering, in a nutshell, what are buybacks, and are they good for me as an investor?
Well, in a nutshell, share buybacks are essentially what they sound like. The company is going out into the open market and buying back shares that they've previously issued.
Okay, so I guess I fell into that one. So how does that activity affect me as an investor and a shareholder? Should I be worried about that? Is anything going to happen to my holding?
No, it's not necessarily something to worry about. It's a way that management has decided to return capital to shareholders. It's akin to a dividend. The only difference is that in a share buyback, only select shareholders will receive that capital. In exchange, they'll be selling their ownership in the company.
So that, on the surface, sounds like a good thing, but are there any potential pitfalls? There must be a reason why these companies are doing these, in preference to, say, just paying me a larger dividend, right?
Yeah. One of the more sinister reasons for doing a buyback is that it reduces the shares outstanding, which artificially inflates earnings per share. And a lot of management groups their bonuses are tied to earnings per share growth.
Right.
So if they can reduce the number of shares outstanding and increase earnings per share, then they get bigger bonuses.
Okay, so it makes their pay packets more attractive. So I guess, as a fool and with a foolish investing outlook, I mean, we don't particularly like this way of returning capital to shareholders. A dividend, actually just increasing the dividend, would be a much more attractive proposition, I would think.
In my opinion, I definitely prefer dividends, especially when you have companies that have shown no ability to buy back shares when they're of value. If a company's buying back shares when their shares are undervalued, it's an investment in the company, and that's a good thing in my mind. But you have companies like the retailer Next, who have been consistently buying back shares for quite a while now, despite the fact that their shares are at all-time highs, which tells me they're not even looking at the value of what they're spending their money on.
Okay, so in conclusion, it sounds like we need to sort of pay attention to why these buybacks are going on, to see if they're actually a good or perhaps potentially a bad thing for us as private investors. Thanks for the insight there today, Nate. If you'd like more investing insight or analysis, head over to our website at fool.co.uk.